$10,156,000,000. That is what Nvidia billed to Singapore in a single quarter. The 3 months ending in July 2025, 22% of everything the company sold that quarter. It is the largest quarterly Singapore figure Nvidia ever published. On Wednesday, the 26th of August, 2026, Nvidia published that same quarter again inside a new filing. Singapore is not in it. Not smaller, not folded into another region with a footnote. Absent. The word Singapore does not appear once in that entire document. I counted, and in a moment I will tell you how you can check that yourself in about 30 seconds. In its place, the United States line for that identical quarter is $9.4 billion larger than the version Nvidia printed a year earlier. 3 different stories have been told about that Singapore number since the start of 2025. One says Singapore was buying, one says Singapore was a backdoor into China, one says it was an invoicing address and nothing else. Nvidia has now published the same quarters twice, on 2 different bases. So which of those 3 stories survives contact with the second version? Chapter 1's the number that ran the argument. The 1st of February 2025, a Saturday. Somebody at Singapore's Ministry of Trade and Industry sat down and wrote a single page and put it out on a weekend, which government communications departments do not do for fun. The page is short enough to read in 90 seconds. Its heading runs, "A press statement on whether DeepSeek gained access to U.S. export-controlled chips through intermediaries in Singapore." Here is the sentence that matters word for word. Read it as a lawyer would. According to Nvidia's recent quarterly statement, Singapore accounts for about 22% of its revenue. Then immediately the defense. And the ministry does not paraphrase it, it quotes Nvidia directly. Most shipments associated with Singapore revenue were to locations other than Singapore, and shipments to Singapore were insignificant. Now hold on to that 22%, because it is doing an enormous amount of work. It matches Nvidia's most recent quarterly filing at that moment. The 3 months ending the 27th of October 2024. Singapore, $7.7 billion. Total revenue, $35.1 billion. Run the division yourself. 21.94%. What? And it had arrived fast, go back 1 financial year. The 12 months to January 2024. And Singapore was $6.83 billion of Nvidia's revenue, 11%. The next year it was $23.68 billion, 18% of a company whose revenue had itself more than doubled. So the Singapore row grew by 247% in a single year, and nobody outside the company could say what it was made of. That single number became the load-bearing beam of an entire argument. If Singapore is a fifth of Nvidia's revenue, and Singapore is a few hours from Shenzhen by air freight, then the export controls have a hole in them roughly the shape of an island. You could hear that argument in Washington all through 2025. You have probably heard a version of it yourself. And Singapore's answer was always the same, and it was always Nvidia's answer repeated. Big American and European companies run their Asian invoicing out of Singapore. The paperwork lands here, the boxes go somewhere else. Which is a perfectly good explanation. It is also completely unfalsifiable from the outside, because the only geographic data anybody had was the billing table. You cannot audit an invoice address with an invoice address. And notice how comfortable that position was for everyone in it. Nvidia could point at a footnote. Singapore could point at Nvidia. Anyone who suspected worse could point at 22% and say, "Prove it isn't." All 3 positions were unfalsifiable at once, which is a rare achievement. So the question sat there unresolved. What would it actually take to settle it? Chapter 2, Wednesday's table. Nvidia reported its second quarter on Wednesday, the 26th of August, 2026, after the closing bell in New York. Revenue, $96.2 billion, up 106% on the year. Data center revenue, $89.0 billion. For scale, the guidance in that release puts the next quarter at $108 billion, plus or minus 2%, and states that Nvidia is not assuming any data center compute revenue from China in it. Remember that second half, we come back to it. Filed the same day, the quarterly report itself. Form 10Q for the quarter ended the 26th of July. Go and open it. The SEC publishes it free and your browser's find function does the rest. Search the word Singapore. You get 0 matches. Now the interesting page is the geographic revenue table, and here is what it says for the quarter just ended. United States $60,074 million, Taiwan $26.985 billion, China including Hong Kong $7.88 billion, other $1.28 billion. 4 lines, no Singapore. Count them again if you like, 4. But the table has a second column, and the second column is where this gets sharp, because it restates the year-ago quarter, the 3 months ending the 27th of July 2025. You have already met that quarter. It is the one where Singapore was $10.156 billion and 22%. So side by side, here is what Nvidia told you about that quarter in August 2025 when it happened. United States $23.47 billion, Singapore $10.16 billion, Taiwan $8.53 billion, China $2.77 billion. And here is Nvidia describing the same 3 months on Wednesday. United States $32.9 billion, Taiwan $8.9 billion, China $3.99 billion. Same quarter, same $46.743 billion of total revenue. That number does not move by a cent, nothing was corrected, no error was found, no restatement of earnings happened here at all. Only the geography changed. So do the subtraction with me because it is the whole video. The United States line goes up by $9.427 billion, Taiwan goes up by $373 million, China goes up by $1.216 billion, other goes down by $860 million. Add those 4 changes together. $10.156 billion. To the dollar, exactly the Singapore line that disappeared. That is not a coincidence, and it is not my arithmetic being clever. It is what happens when you remove one row from a table whose total is fixed. Everything it contained has to land somewhere else. And I have found 6 separate reporting periods where you can do exactly that subtraction. So where did it land? Chapter 3, where the line went. You can check this yourself, and I did. 6 periods, 2 full financial years and 4 quarters, each one published twice. Once on the old basis, once restated. In every single one, the changes to the other 4 lines sum to the vanished Singapore figure exactly, not approximately, to the dollar 6 times out of 6. Which means you can read the reallocation straight off the page, so read it with me. Start with the biggest. Nvidia's financial year 2025, the 12 months to the 26th of January 2025. On the billing basis as originally filed, Singapore $23.684 billion, 18% of the year. Restated onto customer headquarters, in the annual report filed February 2026, no Singapore line at all. The United States is $16.2 billion higher. And the China line, including Hong Kong's, is $7.94 billion higher. What? Sit with that one for a second because it is easy to skim past. For a financial year that was already closed, already audited, already reported, the China number went from $17.1 billion to $25.0 billion. As a share of that year's revenue, 13.1% restated to 19.2%. 6 percentage points, appearing in a year that had already been filed. Now take yourself back to the exact quarter Singapore's Trade Ministry was talking about. The 3 months to the 27th of October 2024. Singapore, $7.7 billion. On the restated basis, the China line for that quarter rises by $2.73 billion, from 15.4% of revenue to 23.2%. And now the sharpest one. Watch this quarter in particular, the quarter ending the 27th of April 2025, the quarter in which the American license requirement on the H-20 landed 18 days before that quarter ended. Singapore, $9.02 billion. Restated, the China line goes up by $4.14 billion. That is 46% of the size of the vanished Singapore row. Now I have to be careful here, and you should hold me to it. These are net movements. Nvidia rebased every customer at once. It did not publish a mapping saying this Singapore money is now China money, and I cannot produce one. In principle, some United States billing could have moved to Taiwan while Singapore money moved to America, and the nets would hide it. What I can say is narrower, and it is still striking. When Nvidia stopped reporting by invoice address and started reporting by where its customers are actually headquartered, its China-headquartered revenue for periods already reported went up every time, in one quarter by nearly half the size of the Singapore line. So does that make Singapore the back door? No, and the reason why is the most interesting part. Chapter 4, 3 Stories, 1 Test. Take the 3 explanations one at a time and mark your own scorecard as we go. Story 1. Singapore was buying a small island quietly assembling a very large amount of compute. This one dies on Nvidia's own page, and it died before the restatement. From the annual report filed in February 2025, in the footnote directly beneath the Singapore row. Shipments to Singapore were less than 2% of fiscal year 2025 total revenue. 18% billed, under 2% shipped, 2 sentences apart in the same footnote published by the company itself. If you ever repeated the claim that Singapore was Nvidia's second largest market, the correction was always sitting under the number you were quoting. Story 2. Singapore as the back door. Chips invoiced here delivered to China. Now this one is more interesting because the restatement does not kill it, it complicates it. Look again at the Singapore footnote from August 2025 and read it slowly, because the scope of it is doing something. Over 99% of controlled data center compute revenue billed to Singapore was for orders from US-based customers. Controlled data center compute, not revenue, not data center revenue. A controlled data center compute, a term Nvidia defines by export classification, and which in the previous quarter's filing it spells out as a list of products. A 100, H100, H200, B200, GB200, and several more. Notice what is not on that list. Go back and look because this is the hinge of the whole argument. The H20. Here is the H20 story, in Nvidia's own words, filed on the 15th of April 2025. On the 9th of April, the United States government informed the company that it now required a license to export H20 chips to China, Hong Kong, and Macau, and in the filing's phrasing to companies headquartered or with an ultimate parent there. Read that again. The export rule was written on a headquarters test 7 months before Nvidia's own reporting moved to one. Before that April, H20 went to China without a license. Afterwards it did not, and Nvidia booked a $4.5 billion charge that quarter for inventory and purchase obligations it could no longer use. And which quarter shows the biggest China reallocation in the restatement? The one ending the 27th of April 2025, $4.14 billion, the H20 quarter. So the 99% figure and the $4.1 billion are not in conflict at all. They were never measuring the same thing. One is about controlled chips, the other is about all chips. Which leaves story 3, Singapore as an invoicing address. For the July 2025 quarter, 93% of the reallocation went net to the United States. On that quarter, the boring explanation is the right one. But it was the right one for that quarter, not for all of them. Does one quarter's answer settle the year? Chapter 5, Headquarters Lies 2. Here is where I want to disappoint anyone who came for a clean ending. The new basis is not the truth. It is a second convention with its own distortion. And Nvidia tells you so itself, in the footnotes to that table in its annual report. Look at the Taiwan lines. In the quarter just reported, customers headquartered in Taiwan bought $26.985 billion of Nvidia product, 28% of the company's revenue. A year earlier restated it was $8.9 billion. That is roughly a tripling. So, has Taiwan become the second largest buyer of artificial intelligence hardware on Earth? Of course not, and Nvidia says so directly, from the annual report footnote. In fiscal year 2026, we estimate 76% of data center revenue from Taiwan-headquartered customers was attributed to end customers based in the United States and Europe. In the quarter before that, the estimate was 86%. Those are the Taiwanese contract manufacturers, the companies that physically build the racks that go into American and European data centers. Under headquarters accounting, an American hyperscaler's order becomes Taiwanese revenue the moment it is placed with a Taiwanese assembler. Now bring back the sentence I asked you to keep from the earnings release. Nvidia's outlook for this quarter assumes no data center compute revenue from China at all. A zero. And yet the China line in the quarter it just reported is $7.88 billion, over 8% of revenue. Both are true, and they are not in tension because they are different measurements again. One counts where a customer's head office is. The other counts a category of product going to a place. Nvidia also disclosed that Hopper data center shipments to China in the quarter were under 1% of data center revenue. 3 numbers, 3 definitions, 1 country. So think about what has actually happened to your picture of this market. Under the old basis, Singapore looked enormous because that is where the invoice was raised. Under the new basis, Taiwan looks enormous because that is where the box is screwed together. Both maps have a country that is far too big. It is just a different country. And that is not a scandal. It is the nature of the thing. There is no single field in an accounting system that answers who is really using this chip and where. A company can tell you who it built. It can tell you where that customer's head office is. It can tell you where it shipped the pallet. 3 answers, 3 different maps, none of them wrong and none of them the territory. What changed on Wednesday is not that we got the truth. What changed is that we now have 2 maps of the same ground. And where they disagree, you learn something. Would you rather have 1 map and be certain? Chapter 6: What Singapore Actually Traded. There is a market underneath all of this, and it has been quietly answering the question for 2 years. So go back to the tape with me. Wednesday, the 26th of August, 2026. The last completed session in New York before Nvidia reported. The Nasdaq Composite closed at 26,130.20, down 0.08%. The Nasdaq 100 was up 0.05%. The Philadelphia Semiconductor Index up 0.20%. In other words, nothing. Picture the desk. The print everyone has been waiting for is a few hours away and the tape barely moves. The market went into the most anticipated report on its calendar and did essentially nothing all day. Nvidia itself closed at $209.66, down 1.59%. Then the results landed after the bell. And then something happens that almost nobody in New York watches. Asia trades it first. Singapore's session opened at 9 in the morning local time, ran its full day and closed. All of it before New York opened again. Thursday, the 27th of August. The Straits Times Index closed at 5,684.12, down 37.47 points. Down 0.65%. Singapore's answer to those numbers was to fall. Now look underneath the index with me because it is not uniform. Venture Corporation rose 1.67%, UMS rose 1.11%, AEM rose 0.11%. Franken was unchanged to the cent. The chip-linked names went up mildly, the index went down, and it went down on a banks. DBS fell 0.77%. According to FTSE Russell's own fact sheet, dated the 31st of July 2026, DBS is 28.69% of the Straits Times Index. Multiply those together and DBS alone took 0.22 of a percentage point off the index, roughly a third of the whole day's fall. Add OCBC and UOB, and the 3 banks are 56.69% of it. Hold that result next to the 22%. For 2 years, a filing said Singapore was more than a fifth of Nvidia's revenue. Ask yourself what a real fifth of Nvidia's revenue would have done to that index on that day. Then look at what it did. It fell on a bank. That is what a billing address looks like from the inside. For completeness and label this clearly, as I recorded this, New York was still trading. At 2:18 in the afternoon New York time on Thursday the 27th, Nvidia was at $227.52, up 8.5% on the day. That is a live price mid-session. It is not a close and I am not going to treat it as one. Chapter 7: The Limits of This. Be exact with me about what I have shown you and what I have not. Because on this beat, the gap between those 2 things is where people get hurt. What is solid? The arithmetic. 6 reporting periods, each published twice, and in all 6 the changes to the remaining lines sum to the removed Singapore figure to the dollar. You can reproduce it in a spreadsheet in 10 minutes with nothing but the filings, and I would rather you did than took my word for it. What is solid? The quotes. Every sentence I read out in quotation marks is verbatim from a document filed with the SEC or published by Singapore's Trade Ministry. What is not solid, and I want to say this plainly, is any claim that a specific dollar moved from the Singapore row into the China row. Nvidia did not publish that mapping. The figures I gave you are net changes across a whole basis restatement, and a net can conceal offsetting movement in both directions. So what would change my mind? If Nvidia disclosed a reconciliation showing that the increase in its China-headquartered line came from customers previously billed through Japan or Korea or the United States rather than Singapore, the specific link I have drawn would weaken immediately. I would want to know that. And here is a second thing that would change my reading. If shipment destination data ever became public, actual customs records matched to these products, and it showed the physical flows tracking the headquarters map closely, then I would have to conclude the new basis is better than I have credited it, and my two maps, no territory argument is too cute. One more caution, and it is the important one. Nothing here tells you what any share is worth. I have not given you a price target, and I am not going to. This is a story about how a company describes its customers, not about what its shares should cost. Chapter 8 and 2 Maps. There is a small lesson in this and a larger one. The small lesson: when a company changes an accounting basis and recasts prior periods, the recast is free information. You get the same reality measured twice. Most people skip straight to the current column. The interesting column is the old one, restated. Next time, start there. The larger lesson is about what a number means when a lot of people need it to mean something. 22% was never a fact about Singapore. It was a fact about where invoices were raised. But it arrived in the middle of an argument about export controls, and an argument will take any number that is the right shape and put it to work. Singapore's Trade Ministry spent a weekend in February 2025 explaining that. Nvidia had already explained it in a footnote under the number itself. Neither explanation traveled, because a footnote does not travel and 22% does. Now the row is gone. On Wednesday, the last quarter it ever appeared in was republished without it. And what stands in its place is Taiwan at 28%, a figure that will be misread in exactly the same way within a year, by people who did not read the footnote saying 76% of it ends up in America and Europe. So the next time you see a country attached to a very large number in a technology company's filing, ask one question before you build anything on it. What did the company mean by that country? Billing address, headquarters, shipping destination. 3 different answers, and nobody who quotes the number ever says which one they picked.